Electric car startups are on a joyride. Little-known companies that have sold few or no vehicles are hitting valuations higher than decades-old household names. Investors are betting big on firms that still have a lot to prove, hoping to replicate the success of Tesla, which has become one of the world's most valuable companies. Paolo Montecillo reports.
Governments and industry giants alike pledged to accelerate the shift to electric cars at the COP26 climate conference this month. Fuel-burning vehicles account for 10% of global emissions. And according to experts, gas guzzlers have no place in a carbon-neutral future.
We have urged governments and manufacturers to commit to end the sale of polluting vehicles.
For Ford, we not only want to build high-quality vehicles at scale, but we want to do so in a way that it saves, it's good for the planet and it's good for the environment.
That rhetorical rubber is resonating with Wall Street. Driven by the promise of profit and environmental concerns, investors are hopping on the battery-powered bandwagon. Amazon-backed Rivian is now worth more than Volkswagen, with shares doubling since its IPO last week. Another California startup, the Lucid Group, has a market capitalization of $90 billion, matching General Motors and overtaking Ford. Neither company has any meaningful revenue yet. Rivian models will be launched in December, while Lucid plans to start production next year. Their soaring stock prices mirror the enthusiasm for industry pioneer Tesla. Elon Musk's trillion-dollar baby is the world's most valuable car maker, and its potential rivals are getting caught up in the hype.
Rivian is really, trying to own the entire value chain, which includes direct-to-consumer sales, charging networks, and a commercial vehicle business. And in that way, I think investors are looking at this as sort of the next Tesla, or a company that's more similar to a Tesla than the incumbent automakers.
The International Energy Agency expects electric vehicle sales to grow 30% a year until 2030. That's enough for companies big and small to make money if they can make cars quickly enough. Paolo Montecillo, TRT World.
And let's get more on this now with motoring journalist Nick Gibbs in London. Nick, thank you very much for being with us today. Markets seem to have taken a very strong view on the pattern of future profitability and revenues of these companies. I mean, some of these electric vehicle startups have no meaningful revenue. Some of them have also posted losses in the third quarter. I mean, how are these prices justifiable in the markets?
Well, they're both not justifiable and also eminently justifiable. It's a really odd situation because, on one hand, as you say, they have no revenue. Rivian, for example, say they have 55,000 people wanting to buy their cars, but they put a refundable deposit down, so they could just take that. They could say no, they don't want the car, and Rivian wouldn't have the sale. They've got orders from their shareholder Amazon, which is obviously a big boost for the company, and they reckon they're going to do 100,000 vans for them by 2025. But still, I mean, that's a long way off, 2025. And, that, as you say, they're currently worth more than Volkswagen and third behind Tesla and Toyota, which is insanity in some respects. But investors, they've seen how that Tesla has made millionaires of shareholders. And they're thinking, right, let's get at the bottom of this and then ride it all the way to the top, which is what they hope is going to happen. And
right.
You can sort of understand that.
Right, and Nick, you call this insanity. And I mean, something else I don't really understand. Traditional automakers like General Motors and Honda are also foraying into EVs, yet investors seem to prefer these startups. Why is that the case?
Well, I think, sort of investors have priced in the fact that these companies like Ford and Volkswagen have got to shake off their legacy business, or at least adapt it, and that's a costly process. They have years of experience of making vehicles. So a practical head would say, look, it's obvious that these guys are going to come in and try to take the market share in the electric vehicle market. Of course they are, but then you just have to refer back to Tesla. Tesla, for years made no money, and now they've made, for 9 quarters on the trot, they've made money. The last 2 quarters, they made over $1 billion profit. There's people saying they're going to get to 20 million vehicles by 2030. I don't think that's going to happen, but there's a lot of buzz around it.